Good morning, fam. Uncle Doug here, dropping some more mortgage and real estate knowledge on you from a brisk Las Vegas this morning. I woke up and went to the gym. It was in the 30s. Uh, the weather seems like the furnace just turned off and we went into the deep freeze with what fall? There was no fall. Very interesting. Las Vegas, as always. I first moved here in 1997, so I've been here a minute or two. Look, here's what we're seeing in the market. First of all, let's talk about rates. Rates today seem to be coming down a little bit. We've had a bump ever since we waited for that big Fed announcement several months ago. They dropped it 50 bips, and then they just dropped it again 25, and the rates immediately went up. We've had an election. The stock market reacted to the initial news of Trump's presidency with a bump because he is very pro business in his stance, which means low taxes and low bureaucratic BS that can stifle companies. That means that the companies tend to do well. Their stocks go up, and since bonds and mortgage rates compete with stock, they have to go up as well to compete for the same dollars. So we've seen mortgage rates go up. We don't know if they'll come down or not. Is the honest answer. You can find a talking head, including myself, yours truly, that is on every side and can switch as the pendulum swings. What rates are going to do? There is evidence that we could be in a recession next year, not because of necessarily the new president administration, although that could come into a factor. Some of his policies are inflationary, like tariffs can be inflationary. Companies have already announced that they're going to be raising their prices based on whatever happens, and these are companies that affect everyday Americans, like Black and Decker, AutoZone, and Walmart. Amazon and Walmart are the two biggest importers from China. Now, a lot of companies will try and move their supply chains out of that area. How fast they can do that, because if there's no tariffs from India, for example, then they'll just move their supply chains or move their factories and sidestep the tariffs. We'll see how that all works out. But we've had a very big run for a very long time in the stock market and in housing prices for well over a decade, and all good things must come to an end. And at some point, the market will probably react and cool down, and we go into a recession. We've seen big ones in this trend period. We've seen small ones. So there's no crystal ball. Hang tight. You can always refinance if rates drop, right? As far as housing goes, look, housing has always been a good investment if you're holding for a long period of time. If you're going to be in a house for 2 or 3 years, you'll have to analyze what the market is currently doing in your area. If you're in a Vegas area, for example, and Henderson and Summerlin, we are always seeing growth out here. It is a very desirous place for the entertainment, obviously, the nightlife, the tax environment, the business environment is good out here. I talked to a woman that just moved here from Chicago last year, and she says the fact that we have almost every day is sunny to her was a godsend after coming from Chicago, where it's cloudy half the year. So there's always going to be pressure on the market out here if you're not buying to flip, meaning if you're not going to be a short-term holder of the house. I think if you want a house, get a house. That is my bottom line. I have been everything you can think of in this industry. Certified residential appraiser. I managed 400 family homes for a while here in Vegas with a team. Builder, developer, property manager, investor, like I've said. I've kind of done everything. I'm a mortgage banker, and I'm also a certified liability advisor. So I'm here to help you make wise decisions regarding your short and long-term financial debt structure and make sure it's in alignment with your short and long-term financial goals. Let's take a quick look at the Vegas market. This is Clark County in general. So this is just the Clark County, probably the outlying areas. And you can see that we have still a seller's market. We still have a shortage of houses out here. We have corporate buyers out here buying up areas, which hurts because they turn those into rentals and they never hit the market again because the corporations hold them. If we look at Henderson, we're seeing we're almost in balance on the housing. and condos were about the same. If you look at the inventory for this area, and this is all brought to us by Chicago Title, but you can see that the market in Henderson is pretty solid. The price has been, the inventory's been going up. If we look at the median pricing, you can see that we've been flat for a while, that it's bouncing around, but nothing really crazy is going on in Henderson. There's been a solid appreciation out there, however. And if you look at Las Vegas proper, you're going to see that we're close to equilibrium, but we're not there. Condos, I think we're pretty close. Yeah, we're right on the bubble for being. So if you have a realtor that's a good negotiator, you can probably get a good deal on a condo in Vegas right now. If you need help finding a realtor, I work with some of the top people in the city. Let me know. I can definitely hook you up. And let's look at if you look at the trend for inventory, we're seeing a slow and steady incline in inventory on condos and on houses. We've seen a nice hook since I think it was we kind of bottomed out in November. There was and then it's been slowly climbing. But at the heyday, we were at 5,048 houses, and right now we're at 3,500 and change. So we're still off by a considerable amount. Obviously, as I've said before, condos are easier to get inventory on the market because it's a much more efficient way to build. That's partly why the pricing is down, and because there's obviously less land cost, and it's more efficient. Your trade guys, your drywallers, and electrical guys can get in there and hit unit after unit after unit. They don't have to pick up and move. They just work right down through the complex. So that's what I'm seeing today, guys. Again, if you're wanting to buy, I don't see anything that says you shouldn't. I'm seeing talking heads that are saying that Vegas will go up by anywhere from 1 to 5% next year, and for the next 3 to 4 years at least. Nationally, I know some talking heads are saying that we need to see a major price adjustment in some of the really high-cost areas. And Vegas is certainly not a high-cost area, but in some of the California markets in the Northeast, where houses, starting homes are $1 million. Obviously, that's problematic, especially when rates are high. If they stay high, you may see a market correction. If rates get low, a lot of people are going to jump in the game, and that's going to push pressure upward again on pricing because people can afford more. So take it with a grain of salt. If you have any particular questions, reach out to me. I'm happy to chat it out with you and see if this makes sense for you. Let's take a look at, if you already own a home, let's take a look at your liabilities. Make sure they're appropriately structured to hit your financial goals. Uncle Doug, dropping knowledge, be the change you want to see in the world. Have yourself a great day. We're going to skip next week for Thanksgiving. Have yourselves a fantastic Thanksgiving.